Mm, where did the book go? Just give me 1 minute. I need to open everything again. Business economics, Cambridge teaching stuff. Acha, Ankit, while I load the book, could you send me the answers for the next chapter as well, please? For the cash flow one. Share capital is when a business sells shares to raise large amounts of money. Selling shares has no interest payment. They are avoided only what? Dissec of share capital? What's this? The only disadvantage of share capital is the additional cost for administration and communication. These charges, nahi, that's not the only disadvantage. Acha, you have understood the advantages, and acha, for the advantages, let's look at it a bit more. For the advantages of mortgage, acha, one, we said payment is deferred over a longer period of time, so there is no immediate payment, but the downside is that there is some payment eventually. Another advantage of mortgages is that the interest that you pay, so interest, it reduces taxable profit. So by whatever amount of interest you pay, your taxable profits will be reduced and you'll have to pay tax on a smaller amount of money. So your total tax expense is reduced as a result of this. Comparing that with the share capital, that for this mortgage you are paying interest. For share capital you are paying dividend. Dividend will not be allowed as a taxable expense. I mean tax allowed expense. So the same way somebody, they might say that I paid interest on my loan, because of that my taxable profits, they got reduced. So if I'm paying dividend on share capital, that should also reduce my taxable profit. No, it doesn't happen. Share capital would make, so these are all the advantages and disadvantages of mortgage or borrowing. Hopefully you have noted these down. Okay, for the share capital, one advantage you mentioned, fine, that we do not have to pay back. Did you mention that? You said that for share capital you said there is no interest payments. All So number one, interest is avoided. Number two, interest is avoided also in the sense that dividend is also not compulsory, or at least the percentage of dividend and dividend percentage are not fixed. So you can pay back as and when the profits are available. Okay. The third advantage, it could be that it's permanent finance, permanent source of finance. So if it's a permanent source of finance, there is no repayment involved, as is involved in the case of mortgages. Okay. A disadvantage, the way I would structure this answer is that I would take up a point and I would give it comparison of both share capital and mortgage. For example, I take up the point of payment. For example, repayment, there is some repayment involved in mortgage, there is no repayment involved in share capital. There I have to pay over and above the amount that I've got in the form of interest. For share capital, I do not have to pay that. And the dividend that I pay, it's up to the business that how much they afford, whatever they afford, they can pay according to that. Acha. Similarly, is it a permanent source of finance or is there some repayment? Is it a tax allowable expense or not? So for dividends, you can write over here, dividend is not allowed, not tax allowed expense. You will not be allowed a deduction of dividend from your taxable profits. So there was another point that I had in mind for fourth. It was uh, permanent source of finance. Acha, now the downsides. The downside of share capital is that you give up ownership of business. Do you agree? Hmm. I'm saying, do you agree to this point? That whenever you are obtaining finance through share capital, you have to give up some part of your ownership, and it's not for a period of time; it's permanent. The other thing is that since you are giving up your ownership, these hmm, hmm. The other thing is that these new shareholders, they can also interfere in the management, or they now have a say in the management of the business. Interfere in management. Management in the sense, yes, they won't be involved. No shareholder is involved in the day-to-day management, but for important issues such as appointment of auditor, election of directors, these new shareholders, they'll also have a say. However, the lenders in case of mortgage, they won't have a say in how my directors or auditors or other key decisions they are taken by the business. Their concern is just to the extent of the loan that they have got and the repayment of that loan. They cannot interfere in the internal affairs of the business. Got it? Acha, what you have written over here, share capital may make you sell shares. This means there will be very high cost of communicate with. Now, where did you get this from? There can be. Acha, both will involve some legal work. For share capital, there is a different kind of legal paperwork and everything that's involved. And for mortgages, there is a different kind that is involved. Obviously, the bank usually which is financing this expansion of your business, they'll ask you for projected cash flows, projected income statements, securities, and everything. So both have got their own set of legal documentation that is required. Okay. So hopefully with these points that we have discussed now, if you get such a question again, you'll be able to attempt it better. Do you think? Do you think so? Hmm. Tell me your confusion. Tell me, is there anything that you don't understand? We'll get to the next chapter. For this, what we have done right now, the sources of finance. ठीक है. Shall I give you a few questions right now that you can attempt as homework from the same chapter? Okay, just a second. अच्छा जी, this one, ऐसे business. अच्छा. अच्छा, did you send me the answers for the next chapter for the cash flow one? Could you please recheck? I don't think they have reached. No, no problem, no problem. We'll do it together. Just a minute. I send you this one for homework. Um, Snip and sketch, and then I say Control N. This, please. Okay, and now I share it over here. So these are some more questions from the source of finance, and hopefully you can give answers to these. Would you be able to submit answers for this by tomorrow? Just give it a try. Just give it a try. Acha ji. So for this one, for the cash flow chapter, there is just one paper of answers. Okay, one second. Let me put it up here. What is it? Downloads. Acha, and from downloads, I bring this thing. Okay. Mm, mm, mm. Did you take help from the book while writing these answers for both chapters? Okay, all right. As I find it strange, usually the response that I get from students is that this finance portion is the one that many find the most difficult of all the business. I personally find this one to be the most logical and the easiest to understand. I don't know. Okay, okay. So hopefully when you get to your school lessons now, it would be easier for you to comprehend and respond in the class. Acha ji, we are going for the cash flow questions. Acha, cash flow, the first question it says, describe what cash flow forecast shows. Acha, a cash flow forecast is a financial document which has predicted expenses for the future cash balance at the end of partly right. We have seen that it's just written over here. Thankfully I haven't erased the cash flow information yet. Cash flow, cash outflow. So out of the whole cash flow document you just mentioned payment of expenses, which is just this thing. Payment of expenses, where is it? Cash purchases, and this, just this one. What about all these items? They're also part of cash flow forecast. What about all these items? They're also part of cash flow forecast, right? And then, yes, you also mentioned closing balance, but there are other items as well. So the better way to answer this thing is, Acha ji, cash flow forecast is a financial document which has predicted cash inflows and cash outflows from the business and the resulting cash balances, which has predicted, instead of expenses I'll write cash inflows and outflows for the business and resultant cash balances, cash at the end of the month. Fine. Months, or better term to use over here would be period, because for a small business they might be making the weekly cash flow forecasts. Okay, so in that case they'll have cash balance at the end of each week, or if they're making it for a quarter, some big business, it might be the cash position, the cash balance at the end of each quarter. So a period is a generic term to use over here. Okay, noted. Acha ji, for question number 2, it says prepare 9-month cash flow forecast. Use a spreadsheet if possible. ठीक है. All right. Acha ji, the 9 months are from April, May, June, September, October, November, December. This is the predicted revenue. Acha. So from April to December, we have to make the cash flow. So what I'll do over here is I'll first write these months. I'm sorry. I thought I already was. A window. This window. April, then May, June, July, August, September, October, November, December. Do you know how to use spreadsheets? Shall I? Okay, Excel, yes. Shall I make it over here or shall I do it on a spreadsheet? Your choice. All right, all right, all right. We'll make it over here. Acha ji. The next thing is, so here I'll write cash inflows. For each month, I'll note that. And then down here, I'll note the cash outflows. Cash outflows. Acha ji. Anything else that I need to note? Not now. I'll just give some more room for cash inflows. Acha ji. Let's now start punching in the figures. For cash inflows, let me read. Bank loan would be needed. Sarah would contribute as capital. One second, one second. Let's just first read everything and then predicted revenue. There is this business directly listing will cost 100 in May. General overheads, advertising 80 per month. Acha. Let's begin with the things that are happening every month. Okay. So for cash inflows, let's start with the revenue. Okay. For the month of April, how much do I have for revenue? 2000. 2000. For May, it is 2100. Then for May, it is 2100. June, it's again 2000. Acha ji, June it is 2000. For July it is 2500. For August it is again 2500. Acha ji, for September it is 2000. All right, 2000. October 1000. Acha ji, November 500 and December 0. ठीक है जी, revenue noted. Acha, after revenue we have got, let's go to the top of bank loan of 3000 would be needed in April. Acha, bank loan, would they take this bank loan? Let's say they would. So I write over here bank loan, and this bank loan is in the month of April. So how much? 3000. Okay. Then Sarah would contribute 2000 of her savings as capital. So I write capital. How much is she investing? 2000? 2000. A van would be purchased for 2000 in April. So I'll take this as van purchase. It will be cash outflow. Uh, 2000, right? How? Which contribution? That 2000 is inflow and total equipments would be purchased April. How about we keep them separate so that we know that which is for which? So we just write equipment. Equipment is how much? 3400. Acha, then laptop specialist again. So we can see that at startup stage for the first month, there are a lot of cash outflows and things that are specific, some inflows as well, which are specific to the first month, which might not be there for the next months. Acha, software, this would be in April. So laptop, how much? 600, it said. Okay, business directory selling, listing. So listing, but this listing has to happen in the second month. How much? 100, right? Acha, 100. There will be general overheads of 400 per month. So I write overheads, and for each month I write 400, 400. Acha, then 400, then 400, 400. Yes, 7, 8, and ninth month 400. Acha, just a second, please. Um, this. Let me draw this. Let me draw lines so that should have done at the start, but anyhow. अच्छा जी. June. Then you have this, and then there is April. अच्छा जी, this and next, sir, what do we have? Next point was advertising will be 1100 in alternate months starting in May. So if I write over here advertising now, hmm, अच्छा जी, so you're saying May 1000, 1000 or 100? 100. Okay. Then July 100, then September 100, then November 100, right? That's it for this advertising. Acha, what else? What's the next expense? Drawings. Acha. Um, Drawings is 800 per month. So the same way we had, hmm, here is June, here is June. Acha ji, 800, 800 every month, right? 800, 800, 800 and 800. This, this, this. ठीक है. What else? Loan repayment 200 from April. Why? When did she get the loan? So same month she takes the loan, she also starts repaying it as well. Acha. Maybe she took loan at start of the month and repaid at the end. Anyhow, we'll just note it. Loan repayment. So how much is it? 200? 200 and it goes on till the end every month? 200, 200, 200, 200, 200, 200 and 200. That's it? Acha, let's now just total the things. So for cash inflow for the month of April, what do we have? We have 2000 revenue and then 3000 bank loan. ठीक है. And capital also 2000. So total inflow is 7000 and total outflow for the month of April is 2000, 3400, 5000, 6000, 6600. I think 6600, right? 6600. So opening cash was nil. So that before opening cash, let me write net cash flow. 1 second. Over here, net cash flow, net cash flow. So 7000 minus 6600 means 400. Opening cash is added. This will be added. So 400 plus 0. I'll have 400 as closing cash. Acha, this 400 will be opening cash for next month. So I straight away write 400 as well. Acha, let's do the same. Hmm. Fine. So expenses? नहीं नहीं. 4, 5, 6, 800. So I'll put brackets on this 800 in order to show that this is being subtracted. And So this gives me 1700, and this will be the opening of next month, 1700. The revenue for next month. Hmm. 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 So there is 1400. Mm-hmm. 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 Opening for next 2300. ठीक है जी. The next month inflow is total 2500. अच्छा जी. And for the outflow we have 1500. 400 plus 100, 500, 800 plus 200, 1000. So 1500, right? Okay. So 1500, that gives us 2500 minus 1500, 1000. And 1000 plus 2300, you get 3300. This will be the opening cash next month. Then you have total inflow is again 2500. So 2500, and then outflow for this month is 1400, right? Agreed. 1400. So 2500 minus 1400 is 1100. So you get 4400. This will be the opening of next month. Bless you. अच्छा जी. 2000 inflow. 2000 inflow, and then how much is the outflow? 8 2000. 1500 is the outflow. We are doing for the month of September. 2000 minus 1500, you get 500, right? And 500 plus 4400 is how much? Plus 4900 would be the opening of next month. अच्छा जी. अच्छा जी. This month, how much is the inflow? 1000. Business is doing bad. अच्छा जी. And how much is the outflow? 1400. 1400. So this means there is negative net cash flow of 400 this month, right? But thankfully we had opening 4900, so this means we are closing with 4500. Yes. Acha, for the next month there is 500 of cash inflow, and the outflow is 1500. So it means net cash flow is negative 1000, negative 500, negative 1000, right? For the month of November, it would be negative 1000. 500 is inflow, 1500 is outflow. minus 1000 plus 4500 from last month, 3500. 1400. Hmm. Minus 1400 for minus COVID. You see, it's the month of December, might be December 2019. I, God knows what happened to them. I don't know. But anyhow, you have got your cash flow. ठीक है. अच्छा, I'm just leaving it here for now. The remaining questions we can discuss tomorrow. The two remaining from this chapter and the sources of finance, the fresh ones that I've sent you today. Okay. I'll send you the notes from the other book as well. Hopefully, they'll help further improve your understanding of sources of finance. If I don't, please give me a reminder message. Anyways, let's meet tomorrow then. Okay. Most welcome. Bye.